Talk a little bit about the market reaction here. People were really thinking that we could see euro-dollar in particular fall out of bed. Hasn't done that. We got below 110, 109, but since then we've popped back up. Give us your thoughts on how traders are pricing this story in.
Well, I'm somewhat surprised by the very muted reaction on the euro-dollar. Having said that, our research has shown that over the past 6 months or so, the direction of the euro-dollar has been virtually unaffected by what's been happening in Greek spreads, and therefore by what's been happening with the Greek situation. At the same time, I think what's interesting is that if you look at the intraday price action today, you'll see that it's very, very much similar to the one that we've had a week ago, which basically shows a knee-jerk reaction to the downside in the euro-dollar in the Asia opening, and a gradual normalization. And you know, last Monday, the euro-dollar actually managed to end the day higher compared to the Friday close. So I think on the whole, this shows that the market is taking a view that the Greek situation, irrespective really of what happens down the road with them, is not really an issue of contagion and therefore a big issue for the currency.
So, Vasileios, would you say then at $1.10 or slightly north of $1.10, a Grexit is already priced into the euro?
I think it's very difficult to judge. If you look at various other asset classes right now, if you look at, for example, what Greek spreads do today, which admittedly it's a much less liquid market than it was 5 years ago, you'll see that there was a movement of approximately 300 basis points upwards. At the same time, apart from euro-dollar, you've actually had a very, very muted reaction in peripheral spreads. They moved 10, 15 basis points higher, which is basically nothing. Taking a big picture perspective here, and if I step back from the short-term volatility and swings on a daily basis, I have to say that I still think the euro is going to go higher from here.
Higher, okay, and therefore you're not expecting Mario Draghi to do very much? Do we anticipate that we're going to see more QE from him, more of a management of the European bond markets via the QE story? Relate to me what's happening in the bond markets in Europe and what's happening with euro-dollar.
Well, first of all, you mentioned whether Mario Draghi is going to potentially step up QE. I don't think that these guys are planning to do, as things stand right now, over and above what they have already planned to do so far. I mean, at the end of the day, let's be realistic. Peripheral spreads were 120 basis points 8 days ago. Right now, they're 150, 155 basis points, which, as I said before, it's pretty much in the price. In terms of if you look at the relation between a nominal as well as real interest rate differentials and what's happening in the euro-dollar, I'd say right now that virtually a class of econometric models would probably predict a euro-dollar quite higher than it currently trades, closer definitely to the 115 level. So I think what's been happening is that overall we've started seeing a rise in bond yields that I think reflects to a large extent the repricing of slightly higher inflation expectations and, importantly, the building up of confidence in the Eurozone, which has pushed euro-dollar a bit higher. And at the same time, you know, if you look at the flip side, you'll see that I think too much was already in the price of the dollar.